Hello and welcome to the Adansonia Capital Global Opportunities Portfolio Update for May 2026. This is our disclaimer. Please read it at your leisure. I'll assume that it's read to move forward. So the month of May for the portfolio was a good month where the portfolio returned 5.35%, outperforming our index or our benchmark by just under 0.6%. It builds on a very strong April as well, and slowly but surely we are regaining some of the lost alpha from the first quarter of 26, which was a very tough quarter for the portfolio, where we saw a very strong rotation out of growth towards so-called value over that period, and also there were issues around tech company capital budgets or capex budgets, and also the fears of AI disruptions, where the portfolio does own a few tech companies. Since inception, which is a little bit over 7 years now, the portfolio has been returning, or has returned 15.28% compounding, outperforming the index by, again, around the same 0.56%. Nothing was traded for the month of May. The portfolio currently stands with around 15 stocks, not around 15 stocks, with 15 stocks and around 2.6% cash. So the topic for today is a topical one. Which is the Space X IPO. So obviously this was launched a little while ago, and had an incredible rally from listing. So it was the largest ever IPO of $86 billion US, which had a $10 billion green shoe added to it. And the stock rallied from the $135 subscription price to $222.72, up 65% on listing over the first week or so. A remarkable and completely illogical performance of an unprofitable rocket and AI company. When you compare it to the existing profitable and undervalued tech and AI companies, which are currently being punished by the market, either for fears around AI disruption or essentially for the size of the capex budgets that the companies are currently basically supporting. SpaceX in itself is unprofitable, so we've decided to do a comparison on revenue numbers. In actual fact, as I mentioned before, where the market is worried about capex budgets. Look, it's not as large as a budget for Microsoft at the moment, which is around $180 billion, but capex for SpaceX in 2027, I think, was on the order of about $63 billion, and the company is currently hemorrhaging around $8 billion in cash per annum. So just having a look, SpaceX is trading around 39 times on a revenue multiple when you compare it to the likes of Microsoft, just under 7, Amazon just under 3. It's low. Amazon is low because obviously it's got a large web-based retail business. Alphabet or Google, which is again around 8 times, and Nvidia 9.5 times. Interesting to see or note that basically with the run up to this IPO or for the listing of SpaceX, these stocks or the tech stocks were actually sold down by institutions to fund their SpaceX allocation. So again, the likes of Microsoft, Amazon, and Alphabet, which is in our portfolio, face further headwinds just by people selling them down to make room for SpaceX. The Elon premium ugly launched a share price, as we spoke about before. It's very hard to quantify it. It's not fundamental, and also, is it deserved? Because Musk has a very well-documented history of overpromising and undelivering with Tesla, which still carries a market premium when you look at this table, where it's trading on a P of 173 times for 27, versus Microsoft, which is under market at 17.9, and Amazon and Alphabet around 24, 25 times. In saying that, SpaceX, is an exciting story. It's launching around 250 to 200 satellites, 280 satellites a month to build and maintain Starlink. But at the moment, it's unprofitable, and it has an unmatched level of blue sky that's supported by the stock market versus its peers, in particular the tech and AI companies, which I mentioned above in this table. Largely, we did not participate in the IPO. We just couldn't justify it at all on a fundamental value. We are a fundamental manager. And again, what we've seen is that the stock is now basically coming back to earth with a thud. But again, it is really very concerning from where we sit to see the way that the market is basically being driven by flows and momentum and not fundamental reasoning. And on the back of this, we've actually made some fairly material changes to the portfolio. Actually, as of today, which I'll be talking about next month. But again, we're really quite worried about the outlook for the market at the moment. Anyway, that is it for the month of May. As always, Tony and I are available for a chat. Our contact details are in the bottom right of the slide, be it through our mobile numbers or through our website. Anyway, thank you again for your support and attendance to this webinar, and I will be in touch in a few weeks to talk about the June quarter. Thank you.